outside one of the states, Congress often has no power at all. In the words of an old Supreme Court ruling, no interference by Congress with the business of citizens transacted within a state is warranted by the Constitution, except such as is strictly incidental to the exercise of powers clearly granted to the legislature. So how could Congress tax the income of most Americans? Article 1, Section 8 does say that Congress has the power to lay and collect taxes. Though certain rules are given for what are called direct and indirect taxes, nothing is said about exactly what can be taxed by Congress, except one clause forbidding taxes on state exports. It is easy for people to misconstrue this to mean that Congress can tax anything it pleases within the 50 states, but this is not true. Consider the case we just saw. If Congress could not directly forbid the possession of a gun near a school within the 50 states, could they instead impose $1 million tax on possessing a gun near a school to accomplish the same goal? No. Though the taxing clause itself does not specifically forbid it, if such a trick were allowed, Congress could control whatever it wanted to, as long as it did it by way of tax legislation. The Supreme Court has addressed this very issue. Many years ago, after the court stated that Congress has no constitutional authority to outlaw child labor within the 50 states, Congress attempted to combat such practices by taxing them out of existence. The Supreme Court threw out the tax, saying that if it allowed the tax to stand, all that Congress would need to do to gain control over all sorts of new matters, jurisdiction of which the states have never parted with, and which are reserved to the states by the 10th Amendment, would be to enact a detailed measure of complete regulation of the matter and enforce it by a so-called tax upon departures from it. The Supreme Court said that to give such magic to the word tax would be to break down all constitutional limitation of the powers of Congress. The court made it quite clear that the very nature of the Constitution creates certain virtual limitations on the taxing power, in addition to the specific limits mentioned. So how does this principle apply to an income tax? Imagine Congress trying to pass the following law. This law would require everyone in the 50 states who receives income to submit his personal financial records to agents of the federal government. In addition, this law would punish some behaviors and sanction others, even though those behaviors have nothing to do with anything under federal jurisdiction. For example, suppose this law punished people for earning more money, or being self-employed, or being married, but would also reward people for having a mortgage, having a college tuition, using an electric car, etc. In the specific powers granted by the Constitution, there is no authority for Congress to do any of these things. But if we are to believe the conventional wisdom about the income tax, then Congress did all of these things and more by way of the tax code. Could Congress acquire jurisdiction over all these things just by making the law in the form of a tax? No. To give such magic to the word tax would be to break down all constitutional limitation of the powers of Congress. As we have seen, the income tax applies only to those engaged in certain types of international or foreign commerce. In one case, the Supreme Court specifically addressed how the 1913 income tax affected an American company which would ship its goods to foreign countries and sell them there. The court stated that because the Constitution empowers Congress not only to lay and collect taxes, but also to regulate commerce with foreign nations, Congress therefore undoubtedly had the power to tax the company's profits from such commerce. The statutes and regulations prove that the income tax applies only to income derived from commerce with foreign nations, such as foreigners getting income from within the United States, and U.S. citizens getting foreign income. Because only those engaged in some form of international or foreign commerce are taxed, only they are subject to the requirements, rewards, and punishments in the tax code. Congress is merely regulating matters that are under its jurisdiction. Brief mention should be made of the 16th Amendment, since some claim that it authorized the tax on the income of all Americans. According to both the Supreme Court and the Secretary of the Treasury, The 16th Amendment conferred no new powers of taxation, but simply confirmed that the income tax inherently belongs in the category of indirect taxes, which never required apportionment, which is a process where a tax has to be divided up among the states according to populations. The broad wording of the amendment talks about the power to tax incomes from whatever source derived, but that does not, for example, mean that Congress can tax the income of everyone in China. That example alone proves that the 16th Amendment has to be read in the context of the rest of the Constitution. The Supreme Court made it quite clear that the amendment did not extend the taxing power to new or accepted subjects, and long after the 16th Amendment was written, the regulations showed that some types of income were still, under the Constitution, not taxable by the federal government. Those regulations went on to say that income from certain types of international and foreign commerce must be included as gross income. Though the income tax statutes and regulations are more complicated than most federal law, the general structure of the income tax is not unique. Often a federal law will describe a legal requirement in general terms in one section, while other sections show that the requirement applies only to those engaged in commerce which is under federal jurisdiction. For example, one section of the federal anti-discrimination laws makes it unlawful for any employer to discriminate against someone based on age. However, other sections show that the term employer, for purposes of that law, includes only those whose business affects certain commerce which is under federal jurisdiction, such as interstate or international commerce, or commerce within federal possessions. Similar limits exist in many other federal laws. Likewise, while Section 61 gives a broadly worded definition which by itself seems to show most income to be taxable, Subchapter N of the statutes specifies in which situations income from within or without the United States is subject to the tax. As with other federal laws, the tax only applies to those engaged in commerce which is under federal jurisdiction. It is true that the federal courts have continually stretched their reading of the Constitution, upholding laws which the courts previously would have rejected as unconstitutional. But even if some federal judges might now claim that Congress would have the power to tax the income of all Americans, such an opinion would be irrelevant, because the law itself shows what Congress did tax, which was primarily international commerce. The limits on Congress's taxing power are brought up not to argue about the constitutionality of the law, but only to show why the statutes and regulations say what they say. Though the federal income tax was widely misunderstood from the beginning, the statutes and regulations have contained the truth for many decades. But an attempt to cover up the truth becomes apparent when one studies the changes that have occurred over the years to two particular sections of the law: the section generally defining gross income, now found in Section 61, and the section dealing specifically with income from sources within the United States, now found in Section 861. In 1939, the statute generally defining gross income used broad wording which seemed to imply that most income was taxable. However, the related regulations showed that some types of income not exempted by any statute were nonetheless exempted by the Constitution itself. The regulations then identified what is constitutionally taxable by saying that income which Americans receive from foreign commerce must be included as gross income, in addition to the domestic income of foreigners and certain income of those doing business in federal possessions. In 1954, the tax code was rearranged and renumbered, and the basic structure has remained the same since. Since then, the regulations under Section 61 have generally defined gross income to mean all income from whatever source derived, unless excluded by law. But they no longer explain that excluded by law means excluded by statute or excluded by the Constitution itself. In addition, these new regulations no longer list those types of commerce income from which must be included as gross income. That list does still exist,